Okay guys, I have a problem. I'm making too much money. Okay, so you're thinking right now, wow, that's a nice problem to have, and it kind of is. But the point I was trying to make is that I'm calling it a problem because we're literally at all-time highs in the stock market, and it's at a time where the fundamentals of the economy is just not there to support it, in my opinion. Now, I'm not going to bore you with like a million charts about different unemployment rates and GDP decline, because I'm sure you've seen those already. And if you've seen those already, you would know that they don't look pretty at all. However, this past Thursday was actually one of the biggest trading days in my portfolio in terms of portfolio value increase. A lot of the stocks I owned in my portfolio were up massively this past Thursday. So let me just name a few as an example. So for example, Revolve was up 22%. Hyliion up 20%, Tesla was up 4%, and then another percent after hours. So I made like almost 1500 USD in a day. Okay, well I actually didn't make 1500 because it was unrealized gains, and I know a lot of people might argue that you don't actually make gains until you sell. And you know what, fair enough, but even $1,500 in unrealized gains is absolutely massive. And I know it sounds like I'm complaining right now, which is not at all the message I'm trying to convey. And I'm also not trying to brag about my portfolio. Back in March, I was losing about $1,500 a day or even more in unrealized losses when we had that big crash. And you know what? If that happens again, I'll promise I'll show you my portfolio as well. I'll promise I'll show you my losses. But what I'm trying to say is that I'm a little concerned. So looking at the average S&P 500 PE ratio, we can see that we're just under 30 right now. And just for historical context, the historical average ever since the stock market has existed, the PE ratio is about half of that. So it's around 15. So from a fundamental standpoint, we're trading rich. And I think that you'd be hard pressed to make an argument against that, right? So I think you'd be hard pressed to argue that we're not trading rich at the moment, because we absolutely are. Now, there's a bunch of other indicators that all seem to indicate that we're trading rich as well. And one example of that is the famous Warren Buffett indicator, which is basically a ratio that compares the GDP to the stock market, which again, for historical context, is usually about 100%, which is considered fairly valued. And we're now at like 170 something percent. So the specific number don't matter here. All you need to know is that that's goddamn high. And also, if you look at the put to call ratio, which is usually used as a measure of market sentiment, that is extremely in favor of people betting that the market is gonna keep going up even more at the moment. So all those dear folks on Wall Street bets who are betting against the stock market, who are buying all these like S&P 500 index puts, well, they're probably getting their face ripped off at the moment. So a lot of the people, they've either lost enough money to convince them to switch to calls, or they've just exited the market entirely. So I think that the market sentiment right now is extremely bullish. So with all of that being said, a lot of people are asking me, what's my strategy? Am I selling all my stock? And my answer to this question might actually come as a surprise to a lot of you. And my answer is, no, I am not selling all my stock. And you're probably scratching your head right now being like, this kind of seems contradictory to what I just mentioned, right? So I've just told you guys all this bad news, and I've just told you guys how we're overvalued, but I'm not selling all my stock. Well, let me give you a reason why I'm not selling. So let me try to explain myself. Okay, so here we go. First thing you got to realize is that when you jump off of the stocks train, you got to choose to jump into something else. So what I mean by this is, a lot of people don't consider this, but when you sell out of all your stocks, you're basically converting all your stocks to cash. So it's always twofold, right? So when you sell an asset, you're always jumping into another asset. So for example, if you're selling stock, you're selling assets that are like parts of ownerships of companies, and then you're jumping into cash. So cash is not necessarily a good asset to jump into, especially at the moment when we have the Federal Reserve and central banks around the world just basically printing money endlessly. So inflation is going to be a risk if you jump into cash. And I know a lot of you are about to scream at me and be like, okay, what about silver? What about gold? What about cryptocurrencies? And I hear you. I promise I will get to those in just a moment. But let me finish the reason why I'm not selling my stocks first. And it's the fact that I don't want to get into the habit of timing the market. So I'm a long-term investor, okay? So I'm not a day trader. And To be honest, if you're looking for advice on how to day trade and you're watching my channel, you came to the wrong neighborhood. So that's all I'm saying. Okay, actually, here's how you can successfully day trade. Just inverse me for the first week that I buy a stock. So, you know, I swear, every time I buy a stock, it always goes down immediately after I buy it. I have like the worst luck. I don't know why. So if I start day trading, the next video that you guys see will probably be me living in a box under a bridge somewhere. So for stocks like Revolve, for example, I literally bought it at like the worst time possible. So I bought it back in January, and my cost basis is around $19.73 a share. So I basically bought the stock right before the big crash, and you know, I think during the March big crash, it was under $10 a share at the moment. So I was down more than 50% on it at one point, but I just held it, and you know what, now I'm up on it again, right? So yeah, I don't try to time the market, and if you've been browsing YouTube for long enough, you probably came across a few other channels who, I won't name any names, but you probably came across a few other people who thought that the market was way overvalued when it bounced like 50% from its March lows, right? And they just decided to sell out of all their position, and you know what, I bet they're regretting their decision now, right? Because we're at all-time highs again. Point is, it's always risky to go all in on something. And you know, I'm a big believer in Tesla, but I would never go all in on even like a stock like Tesla. So yeah, it's always risky to go all in. And when you sell out of all your stocks, what you're thinking is, oh, I'm getting out of stocks and I'm just getting out of everything. You're not actually getting out of everything. What you're actually doing is you're going all in on cash, which is risky. So with all that being said, what's the strategy going forward for me? And now keep in mind, a disclaimer, I'm not a financial advisor here, so I'm just some guy on YouTube, so don't take this as financial advice, and please don't sue me. I'm just telling you guys what I'm doing in the future, right? So anyways, at times like these, it really goes to illustrate how important it is to keep a diversified portfolio. So going back to what we were talking about earlier about other assets like Bitcoin and gold and whatnot, I think it could be worthwhile to convert some of your cash or other assets into precious metals or cryptocurrency. So for me, I've actually started to buy silver. Now the way that I've chosen to do so is sort of in two parts. So I found this silver ETFs. There's a Canadian one called SVR. So I bought into some physical silver coins as well, which I will show you here. So, you know, as you can see, it's really cool. Now, I've chosen silver instead of gold just because I think silver and gold tend to move in the same direction anyways, and silver's a little bit more volatile, so I think there could potentially be more upside with silver rather than gold. So also it's a lot easier to buy these like silver coins for me rather than gold coins, because you know, if you check the price of gold coins recently, one coin is like 2,800 Canadian dollars. So that's kind of expensive for me, right? So you know, like all these silver coins that you see right here, like all these silver coins like put together, they're not even worth like a fraction of one gold coin. So yeah, I also do want to keep some cash on the side. With that being said, I also do want to be able to take advantage of potentially some dips in the stock market. So you know, maybe I would keep like 10, 20, 30% of cash on the side just so that I can take advantage of those dips if those dips were to happen. And I feel like we're probably due for at least a small correction pretty soon in the stock market. I maybe hold like 10% of my assets into things like silver, gold, or cryptocurrency. And you know, the rest I just keep invested in the stock market. I might take out like 5% just for like YOLO options or something. And you know, that's fun. If I lose it, I lose it. It doesn't really matter. I'm not gonna like, it's not gonna like bankrupt me if I lose 5% of my portfolio, right? So point is, I don't want you guys to get too caught up in the price movements of stocks. You know, at the end of the day, stocks go up, stocks go down. So you know, you just gotta remain focused and don't try to like time the market. Now, of course, you can trim, right? So what I mean by trim your position is not like getting rid of all your stocks. It's not like when you go to the barber shop and you ask for a trim and then they just like cut everything off, right? So I'm talking about like an actual trim. I'm talking about what you actually had in mind when you walked into the barber shop. So again, the key word here is trim, right? So if you own any stocks that are just like really high up and really like detached from reality and detached from fundamentals, for example, something like maybe, I don't know, a Zoom or something like that, right? So if you own, let's say like Zoom shares, and the PE ratio and the price to sales ratio and everything, it's just going absolutely crazy, well, maybe you can consider taking some profits on some of those stocks. But again, as I said, you don't want to necessarily sell out of all your stocks, right? Because that's a risk in of itself. Again, you just gotta remain focused and keep that long-term investing mindset. Anyways, the video's getting a little long, so I'll leave it here. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye!